Hello traders, Gary Wagner here. It is 12 o'clock in Honolulu, 6 o'clock in New York on Wednesday, 26th day of March 2025, and this is the evening report for gold and silver. Traders, gold futures are holding their ground near record highs, with the most active April contract currently in the same price area that it was yesterday. The precious metals are up by nearly 14% year to date, bolster safe haven demand, and driving that demand, a combination of factors and events, with the index gaining 0.33%, and gold remains underpinned by haven interest from investors that are based upon the uncertainties raised by international import tariffs and geopolitical risks. The combination of these factors has really been at the heart of taking gold prices higher. A noted ING analyst said that since gold set a fresh record, gold prices have traded in a very narrow and defined range. And over the first quarter of 2025, gold-backed ETFs have recorded 155 metric tons of net inflows so far, bringing the holdings to their highest total since September of 2023. As you know, we are currently long April gold from $3,026. Currently, April gold is fixed at $3,024.70. In New York trading, it gained 40 cents. Now, gold has moved to Australia, in which it is down $2.20, fixed at $3,024.40. Assuming that our current trade moves in our anticipated direction, what levels do we believe are realistic price points that we could see gold move to? To that end, I have created a Fibonacci extension from the middle of December with gold at 26.22 up to the conclusion of this particular rally at 29.70, and labeled this leg of the rally in intermediate wave one of 5, the 5 waves composing a primary third wave. Then the retracement from 29.70 down to 28.49 as a corrective wave 2, the very mild retracement, just about 38.2%. We have seen this leg of the rally here that we are labeling as a component of our primary third wave. So this would be 1 of 5. If completed, this very small correction, if that is concluded, that would be 2 of 5, and then move up. So we would have our third primary wave being 1, 2, 3 would be at minimum the length of 1, but probably much more, 3 of 5, going just shy of 3,200, possibly as high as 3,233, having a deeper retracement of a minimum of 50 to 61%, which would take it back down to about 31, and then a final move up to possibly 3,320, as high as $3,400 per troy ounce. And it would look something like this. All of wave 3, 1, 2, 3, 4, and 5. Which means that we are currently in a intermediate 3 of 5. I believe that could go anywhere between 3,100 and 3,200. A final fourth wave moving back down, and then the final fifth wave, wave 5 of 5, composing a primary third wave, taking gold as high as 3,300. In terms of where I think this trade could take us, if we cover the ground of this next leg, which is 3 of 5, an intermediate third weight of 5, we would be able to get out at about $3,170. Considering where we entered, it would be a substantial profit.
It's been a while since we discussed our wave count in silver, and right now I'm looking at something like a wave 1, 2, 3, 4, 5, A, B, C, and then our current count as a 1, 2, 3, 4, and we are in our fifth wave. So if we are currently in our fifth wave in silver, what can we expect over the next couple days? One thing that's noteworthy is silver consolidating at the higher price point it reached earlier this week on Monday's trading, which is a very good sign of a healthy market. And if we perform a calculation for the minimum that our fifth wave should reach, that would be a 61.8% extension of wave 3, and that takes us to just under $34.90. That's our minimum target for this fifth wave. I think we will likely see a new 10-year high in silver by the conclusion of this fifth wave. Silver is setting itself up nicely for a buy over the next day or so. We will be monitoring the markets and send out any necessary trade alerts.
This has been Gary Wagner
And Joseph Wagner,
wishing you as always good trading
we'll talk to you tomorrow.
for the next daily update and review. Bye-bye.